we are live. Welcome back to Stock Tricks with Nick on this October 16th live stream. So really quick, if you guys are new to the stream, we do these every Wednesday and Friday. The Wednesday live stream is a look more of just the stocks that I'm currently trading and what's on my watch list for the end of the week, and more technical analysis with that live stream. This live stream that we do on Fridays has that same technical analysis, same stocks that I'm trading, stocks that are on my watch list, stocks that you guys can comment. Use the comment section, drop in anything that you want me to take a look at. We'll get through as many as we can with that. But also on Fridays, I do want to do kind of non-chart related trading techniques or tips. This week, we'll be going over how to plan during either gap down days or gap up days. We saw, Monday gapped up, Thursday gapped down, today gapped up a little bit, but especially on Thursday's gap down. I mean, when things gap up, everyone feels great. That's typically not a problem. But when things gap down, like they did on Thursday, if you didn't have a written out plan, maybe you panic sold some strong positions that bounce back later. So we'll go over a little bit of how to handle that. Let's see. We are getting very close to the 1,000 subscribers and 9 days away from my birthday, so would love to hit that number. So if you do enjoy the content, you get something out of it, please leave a like and subscribe to my channel. We're doing these 2 live streams a week, and then we're also putting together a Trading 101 course. I know I've been talking about that for a while now. Because they're not live streams, they're going to be edited, looking good, but that does take a little bit of time. So we're working through our first video now, maybe get it out Monday or Tuesday of next week and keep that rolling. So if you want all things trading related, subscribe, and let's get going. All right, we already got some stocks going in the comment section. Keep it up. I'll look through that throughout the stream, but let's just jump to an agenda. We'll go through the S&P 500, QQQ. Those are the 2 things to kind of judge the overall market that I look at the most. That planning versus panicking talking point. And then we'll go through technical analysis of first what I've gotten from StockTwits and Twitter. Then we'll go through some of the lists that we have in the comment section here. And then we'll go through the trades that I've made this week, starting with the losers. Big thing about this channel is everyone on YouTube and TikTok, Twitter, whatever, they all love to show, look, this is how much money I made. I'm always right. Trading is so easy with XYZ strategy. Reality, trading is not easy. There's nothing easy about it. And I kind of want to take away that illusion. So with this channel, I always show any losing trades that I make, because sure, showing the breakout setup, showing how to identify stocks that are going to continue on in an uptrend, that's all great. But if you don't learn how to handle losses, and if someone's not real with you about kind of how they're feeling emotionally when something starts to work against them, you're not going to be prepared. So I know that's something that I really wish that I had when I first started trading, so want to pass on that value to you guys. Have a couple stocks on my watch list that I want to call out, and then whatever we have left in the comment section. So let's jump to signed out. Get back in really quick. How's everybody's week trading? Pretty volatile week, especially with some of the growth stocks that we had. So I know personally Monday, Tuesday especially was great, and then Thursday, Friday was a little, or Wednesday, Thursday was a little rough for me, but we'll get to that. All right, now we got it going. Let me switch over here so you can see exactly what's on the screen. So am I doing this right? No. Over here, you can see what each of the technical indicators that I have on my screen throughout the stream. So Let's go through S&P 500 this week. So Monday we gapped up and on large volume, so everything looked good. But whenever you get the major indexes pushing over the upper Bollinger Bands, especially the first couple times through, you do get a pullback. And the way this kind of cup was forming through here, I expected some pullback days, and that's what we got through the rest of the week. Tuesday was kind of like an inside day, a little bit lighter volume, little red. Wednesday pulled down overall. Thursday gapped lower and then reclaimed that purple line. That's that 8-day exponential moving average that I love to use. Closed right at the high of the day, but still a red day for the S&P 500. And then today we had that slight gap open, pushed higher in the mornings, and then sold off through the rest of the day. Still held over the 8-day exponential moving average. So overall, this doesn't look too bad. Not too concerned overall for the market. We're heading into elections, so there's going to be volatility regardless of what happens. But nothing here in this kind of cup and handle screams time to get out of the market. So that's the S&P 500. Let's jump to the QQQ, which is the NASDAQ. Much stronger story on Monday. Let me remove my buy-sell flags for now. So Monday we had a very large gap up. That was mostly driven with Apple. They announced that they were having a news. Forget what it was. It was something to do with the next phone coming out. So Apple pushed, I think they were plus 6% that day. And Apple being one of the main drivers of the S&P 500 and QQQ, of course, that pushed up as well. So gapped up, held it pretty well. Got a little bit higher on Tuesday, but then Wednesday and then especially Thursday we gapped down. A lot of the tech stocks, a lot of growth stocks that I was trading were down 3 to 5, 6% at the open on Thursday, which is always a little bit scary. But looking at the chart, we had the 8-day exponential moving average hold really well at the open, and it pushed higher. And then today was looking fine, nothing too special. It was green, red, and then sold off right at the end of the day. Let's look at the end of the day there. Sold off on high volume. Options were expiring this Friday, so not too concerned about that. I'll probably do a little research over the weekend to see was there an actual reason for that, and on Monday we'll find out. But still constructive, still stayed over that 8-day exponential moving average, and a lot of my stocks held up pretty well. So again, nothing that I'm scared of, but definitely a choppy week. When things gap up, you're like, I finally understand trading. I know that's how I was feeling on Tuesday, and every time I say that, I get hit in the face the next day. It's like on cue, and I'm starting to think, should I take positions off after like a really large win, or should I like keep pressing? Should I take some off? I did sell some on Tuesday into strength, but not enough. But still ended up on the week. I think it was up 2.7% overall, about $1,000 in the account. So overall, good week for myself. All right, let's see what else was on the agenda. So I think we're going preventing panic. So if you do follow me on StockTwits, and I think I posted this on Twitter as well, but one thing that I talked about on Thursday when a lot of the stocks that I was trading were pulling down was, all right, take a deep breath and write out your written sell plan. Wait for the first hour to come in, have the first hour set the lows, and then put your stops in. So I have my notebook right here. I know you can't see it, but these were all the stocks that I had. These were all the stops that I wanted to hold. A lot of them were just the entry price on positions that were working well for me. because in the past, especially before I started doing all these live streams and stuff, when I just started trading, something would go wrong like this, and I'd panic sell everything, and then the next couple days it would pop right back up. So with that in mind, didn't want to do that this time around. So I woke up really early, and things were really bad early in the morning. I was down about 1,500, which I think that's a little less than 3%, 2.7 something percent, right at the open. So if a year ago Nick was trading this, he would have panic sold everything, lost $1,500 on the day, and as you saw, most of everything came back throughout the day. I ended up being down 400 or something. Nothing terrible on that. But it's because I wrote out a plan before the money was moving around, before I could actually see my P&L, before I was injecting my emotions into the trade. So I sat down, was like, you're not doing this again. Give it the first hour, but during pre-market, write down your entries, write down where you want to cut some stocks, and then apply these after the first hour. So I did get stopped out of a couple positions. A couple positions ran right towards my stop. My position in JD missed my stop by 1 cent, which is very, very nice. And then a couple of positions I got stopped out of. NVAX, which came back later on in the day. I think it's down today, though. Got stopped out of that. But I let the first hour play out. After the first hour, then go in and put in your stop losses below the low. Well, I guess put in your stop losses, but also really focus on the lows that were put in the first hour. Because the main thing you want to avoid is market opens down, things bounce up a little bit, and then start crashing down and just sell off all day. Like when we've seen really strong market sell-offs, the first hour or so you might get a little pop back up, but then it's just all day selling. That's what you want to avoid. So after the first hour, then you put some stops below that first hour lows, and you probably weren't stopped out of almost any of your positions. P&L probably turned in your favor, maybe not green on Thursday, but definitely brought you closer to even. So that's that was my plan on Thursday. And then for gap open days, well, let me jump back to my notes here. So another thing you can do on gap down days, if you have the available capital, at this point on Thursday, I was like 1.1 times in the market, so using leverage with 10%. So I didn't want to risk more capital while everything was showing weakness. But if you're light in the market and you get one of these gap down days, you can kind of chart out where is support in a strong stock that's already been showing strength for you. Because if it gaps down to that point, you could buy some right there and then do a really good risk reward trade. Put your stop just below your entry, just below, call it the 8-day moving average, 20-day simple moving average, whatever you're gapping down to, and then you put on a little bit of weight onto a trade like that could, as we saw on Thursday, just come right back up. So really quick example of that was with CHWY, CHWY. This is what I was watching. I'm in this trade. Let me throw on my trade history. Again, everything I show is completely transparent, not trying to hide any losses. I want to share my losses so you guys learn from my mistakes. But this was a perfect example. You got the 8-day exponential moving average, gapped down right to that point, held perfectly, and then just pushed up all day. So if I had additional capital, this is something that I would have looked at kind of adding. So on the flip side, on a gap up day, you don't want to be buying the first hour, especially if it's a gap up day on Monday. Over the weekend, there's a ton of news, so it's always going to be volatile that first 30, 45, even hour on Monday. And if you're already starting with a gap up into Monday, you'll see a lot of stocks break out and then sell off that breakout. So almost with anything, any day, give it the first 30 minutes, maybe the first hour before you start putting position sizes on. I know a couple of errors that I made this week, and I keep making them. You guys are going to have to yell at me in the comments for doing that, because I keep making this mistake now with less like dollar amount on it, which is good, but still a mistake is buying stocks that are breaking out in the first hour. So we'll cover that when we get to the technical analysis. Let's see. With the first hour of a gap up, you can sell some stocks that say a couple of stocks that haven't been working in your favor, or have been market laggards, not showing good relative strength, but because the entire market's up, you can kind of sell off those positions, free up that capital for a position that is about to work out, or something that's already showing strength to you. So that's something that I did on Monday. Took a couple positions off that I was in the red at, brought it down to a lower loss, got that capital freed up to a couple stocks that we'll go over that really broke out this week. Jump back to the agenda just to make sure. Yeah, so that's how I handled this week. A lot of gap ups and downs this week. Very choppy trading. Definitely not ideal trading, but I mean, if you're trading this close to the election, there's going to be volatility. You got to know how to handle that. Write out a written plan. It makes it so much easier. Then you're not trading with emotions, especially when you write out the plan before the market opens, before you can see your P&L. So that's my recommendation on that. All right, so let's go to some stocks that I got from StockTwits, and quick plug on that. StockTwits is the site that I'm most active on. So if you want to kind of get updates on the stocks that I'm trading, feedback on anything, where is it? You can follow me on StockTwits. It's Stock Tricks with Nick, and I post there almost every day, and are pretty responsive on that. So Stock Tricks with Nick, and Twitter's Stock Trick Nick. All right. With that said, let's jump to the first one. Is ROKU. Got this from StockTwits, and this is one that you can see I haven't been trading. Unfortunately, because really nice kind of pattern that we like to see on breakouts. You see that volatility contraction pattern that's 17% down that first pullback, 10% down, so that each pullback is less and less, and then you get huge volume breaking out. A little retest of that 8-day exponential moving average. See, I love using the 8-day for pullbacks, because a lot of stocks that break out tend to pull back. And then this is just rode that all the way up. And I completely missed this move, but now that it's pulling back a little bit, again, right to that 8-day exponential moving average, now I'm interested in buying a position here, because this is showing great strength. Let's see, from this breakout to the top, that's 46% in a month or so. Awesome move, showing some good strength. And then the last 3 days, as the market pulled back, look at how light this volume's been on this pullback. That's what you want. You want a strong breakout with heavy volume, and then a light pullback on lighter volume. That shows that the only people selling are short-term traders, or people just cutting off portions of their trade for profit. So ROKU is something that I'll be looking in on Monday. If this can hold the 8-day, even ideally, now, no offense if you're already in the stock, but ideally for me as someone who's eyeing a new buy, I would love to see a break under all these previous lows and kind of cover this gap. So what I mean by that is you see this little gap from the high from October 7th to the low of October 8th. Let's see, the high is 214.26. So if we can get just a quick spike down, maybe like a lower wick, where it spikes down and then comes back and holds that 8-day, that would be the perfect setup to go long, because you cover that gap, the pullback will knock out any of the stops set just below these previous lows, and then it's it's still healthy. You have the 20-day that'll be 20-day simple moving average that'll be moving up, and then that'll be an ideal kind of buy point once it starts to turn around and show strength. I'm not just blindly buying into a downtrend because you never know how far it's going to pull back. But if we pull back, kind of close that gap, and then start breaking over previous day's high, then this is looking really strong. If we just immediately break over Friday's high on Monday, then it's still strong, but maybe you start the position with less size because it's not exactly what you're looking for. But that's ROKU, ROKU. Next one I got is Google. So with a lot of these larger stocks, you had the pullback starting in September. Let's see, what was that? 20% pullback from the top. Found support at this yellow line. This is the 200-day simple moving average. So you see 1, 2, 3, 4 lows of days, found support right there, and then bounced up, and then really got going kind of end of last week, early this week. And then has moved sideways, kind of creating this cup and handle. And you can see these Bollinger Bands, which is 2 standard deviations away from the 20-day simple moving average, just kind of following volatility. That contracted, and then we started breaking out. Got a couple red candles, which is always a signal for me that there's going to be some pullback happening. It doesn't always happen. Again, there's nothing certain in trading. Trading's all about probabilities, just adding probabilities to your side and then rolling the dice. If you think something has to happen in trading, the most likely thing is you're going to lose money. So after I changed my mindset on that, like, I don't have to be right. I'm just trying to take the best odds. It was much, much easier to cut losses quickly and stay in winners, which has brought me to more consistent profitability. But looking at this, you have your handle after that cup. So if we break over these highs here, especially if we do so with volume, this could really take off and kind of retest those highs, and that would be a move up of about 10%. So interesting setup here. Hasn't been an industry leader in the past couple months. There's been other stocks that you can see. This at the bottom here is price relativity to the QQQ. Not really that strong in a downtrend, but has picked up recently a little bit. So maybe this is kind of their signal that they're ready to go again. On the downside, you do have this gap in the chart, which would break under the 50-day and the 8-day exponential moving average. So that would be a high of $1,511 to close that gap. We'll see if that happens. If the market's strong, it's not going to move down to close that. It'll just break through and we'll get going. So that's Google. Another one I had was Boeing, which I think they had some news today about their 747 being okay to fly. Again, I'm not 100% certain on this, but not a stock that I was planning on trading, because if we zoom out, you can see this is not a stock that's in a strong uptrend. I'm always looking for stocks that are already in a strong uptrend and are going to keep on getting stronger. The point of trading is not to buy low and sell high. The goal of trading is to buy at the right price and sell for higher. So this stock hasn't been doing well. No reason to really trade this on strength. We got a gap up on news today. So just like with anything, gap up, what do? You freeze. You don't buy immediately. Give it the first hour, then see if we break over that hour's high. Because that then, as this has been pretty tightly wound up, then it could start moving in your favor. But what did we see? It gapped up. I think it was up like 4%, 5%. Let's see here. 4%, let's call it. Really quickly moved higher and then just kind of fell down. Low of the day, closed at the low of the day right at that 50-day simple moving average. But again, not something that I would personally trade. There's better setups, better probability out there. And the fact that it's sold off on the news isn't that exciting. Maybe that was just because the entire market was selling off, but better opportunities out there, I think. So that's Boeing, BA. Then the last one I got from StockTwits was Etsy, ETSY. This was one that I had shorted in the past and then covered, I think, kind of flat or something on that trade, maybe made a little bit. But since then, look at this, pulled back, had this little breakout and a pullback making a higher low here, giving a really nice entry, really low entry. And if you zoom out, you can see this is a stock in a strong uptrend. So the likelihood that they're going to continue in that uptrend is higher because I'm always trading with the trend. Always trading with the trend. If it pulls back and gives me a good buying opportunity, that's ideal. But that's what Etsy would have done here. Since that breakout, let's see, it went up 31% in a couple of weeks, maybe a month. Thursday, gapped lower. This is a perfect example. Thursday, gapped lower. Went under that 8-day by a little bit, but then basically held that 8-day exponential moving average and quickly moved higher, closed at the high of the day. Today, Friday, slightly higher at the open, then sold off. Much lower volume on that sell-off. So as long as this stays in the up above the 8-day exponential moving average, still feeling good about the uptrend on here. If we now undercut the low from Thursday, that's when it would get a little bit dicey. Maybe you take some profit through here. My profit-taking strategy on a stock that's working for me is every time a stock goes through the multiple of my average gain on a winning trade. This is why it's so important to track your trades and keep your trading statistics. My average gain on a winning trade is about 7% now. So every time a stock goes through 7%, I'll take 10% of the position off, just book that profit, and then it gives me a little bit more wiggle room with the stock. So that's what I would have been doing through here. And I do that for the first 3 multiples, so 7, 14, 21. And then I start to judge the stock after that. I saw in the comments, Nick, you take your profits too quickly. I do. That's something I'm working on. That's definitely a flaw of my trading. But it's good to point that out because if you're not able to look at yourself and actually pinpoint what you're doing right, but especially what you're doing wrong, you're not going to improve as a trader. So I know I buy too early in the day. I know I don't hold on to a stock long enough to profit as much as I can. And by admitting that to everyone on the stream that I'm flawed and these are things I have to work on, it takes pressure away from me always being right, but kind of identifies what I need to work on. So what's something that you guys need to work on as traders? Try to write that down. Say these are the 3 things that I don't do as well. And once you write it down, it's easier to identify and it's easier to fix. That's why I love journaling. At the end of each month, I'll journal each of my trades and say, this is what you did well, this is what you didn't do well. And the more trades that you journal, the more patterns you find, and the easier it is to adjust from that. So those are the 4 stocks that I got from StockTwits. Let's jump to a couple of my losers this week. Again, always showing my losers because I want you to learn from my mistakes. So this is SRNE. I covered this really quick on Wednesday, so I don't want to go too much into this. Really nice pattern here through a kind of a pennant through here. Bought on this low cheat and then added on the breakout here. So on this green day with increased buying volume, I'm thinking this is a really nice pattern. If it breaks out and we test highs, that's 57%. So I did have a full 10% of my position portfolio on this. Broke out, feeling great. After hours, there was a call, and what I should have done was treated after hours news or a call just like I do with earnings, where going into earnings, if I don't have a 10% gain on a position, I will at least cut half of the position. I don't want to be holding through earnings or any news type article. that I don't already have a large profit in, because I have no idea what's going to come through that. I'm not just trading off technicals. Now that's like an actual new information that's going to impact the stock. So what I should have done was immediately just cut the trade, because I only had, I don't know, 6%, 7%. Thankfully, I did cut some into strength as it went through a multiple of my first average gain of 7%. And then after hours, I noticed it was falling, cut half of my position at my entry, and then the next day it was down 14% or something. So I had to cut the rest at minus 14. Just dumb. I should have cut the rest right when I got the news, but right at the beginning of the call, the stock started fading higher. So I was like, oh, maybe this is good news. Maybe this is really going to push through. Shouldn't have done that. Shouldn't have relied on that. Mistake on my end. Good part on my end is I got out after it broke through what would have been my stop. So I kept my stop, kept the loss relatively small. Still one of my largest losses probably since I started up this Stock Tricks with Nick thing. But it could have been worse, because you see today was down 10%, closed at the low of the day, under all the moving averages on high volume. So this is not looking good in the short term. That's SRNE. Another loser of mine was CLDX. This had been a previous winner of mine, because zooming out here, you can see broke out 300% in just a couple days. So that creates that power play that a lot of the professional traders talk about, where it breaks out and then just moves sideways on. Look how light this volume is. Move past the breakout so you can see. But very, very light volume throughout this entire move. Tried to take the trade a couple times. Kept pulling back and stopping me out. Then finally got it after it broke out this one time. I was on vacation on this breakout, which sucks, but it happens. But got in for the second one, sold into strength, pulled back, and then just like this breakout that pulled back to the 8-day exponential moving average, then broke out. I was planning on taking a new trade as it did that. So I drew a downward diagonal there on this green day where it held above the 8-day exponential moving average. I bought in with a full position size, and that's something that I'm taking away from this trade, was instead of buying in with full position on a diagonal entry price, I'm going to start buying in with half at the diagonal and then add the other half with the break over the previous day's high. So you want to kind of get aggressive with your entries, because then you could place even tighter stop losses. So keep your losses very, very small. But the downside to that is they're more likely to fail. And that's what we saw with this one. Long lower wick stopped me out through here, and I had full position size on. So rough loss to take this week, CLDX. And you guys are seeing all this right now. I swear I had some big winners that we'll get to. They bailed me out from all these dumb mistakes, but I want to start with mistakes, keep this stream as honest as possible. Third loser is Sell H. Prime example here. I committed a cardinal sin, which I always talk about people like not doing, and basically I did a double error here. I bought in the first 30 minutes as it broke over the previous day's high, and then it immediately came back through. Thankfully, I did buy with a lighter position size as it did that, because I was like, okay, it's the first 30 minutes. I shouldn't put full position size on. But as it came down through here and bounced off the 20-day simple moving average, I did add the rest of my starting position size onto the stock. So I was adding to a loser. Adding to a loser, I think in my trades 80% of the time, when I've done that in the past, it only puts more money into a losing trade. That's what I saw on this one. Got stopped out of half my position the next day when it broke under the 50-day. I'm still in the position for a little bit less than half of what my entry position would be. So like about 5% of my portfolio. And this isn't a constructive setup at all right now. There's no reason I should be in this trade. If it starts showing strength and breaks over some of these previous days high, then yeah, that's a trade that you want to be in. But instead of just saying, okay, Nick, you made a dumb mistake by getting in the first 30 minutes, I compounded that error by adding to a position when it was a loser, and then it just kept losing on me. So double mistake on my end, terrible trade. Definitely something I can't repeat if I want to be profitable. And then we get to the rocket shits. So a lot of good breakouts this week for me. Let's start with NIO. Hope you guys traded this one as well, because this was a perfect chart to look at. I've tried trading this in the past, got stopped out a couple, so let me just zoom out here. This has been a monster. What is this up now? It's up 580%. At the time that I took the trade, it was up 460%. And that's why people will say, oh, it's overvalued, it's overvalued. I don't care. I don't care if it's overvalued. If it's going to be more overvalued, then I can still make money on the trade. And that's exactly what happened here. So each of these breakouts are perfect examples of what we're looking for. Breakout, pull on high volume, pull back on lighter volume, and then kind of get that wave of tighter pullbacks until big volume comes in and we get a strong breakout. Happened again, boom, breakout on high volume. So this third time, very nice, tight, high flag with light volume after the breakout. So let me throw the trade flags back on. So I got in at 21.68 here and moved sideways on me, but never gave me a reason to sell. Never broke under the low of the day that I got in. Stayed above the 8-day exponential moving average, and then got upgraded by JP Morgan. Strong breakout. Sold a couple into strength the first day as it broke through 2 of my multiples, and then as it stays well above the Bollinger Bands, also been trimming some. Now we have the first red day above the Bollinger Band. That usually gets followed up by a pullback day. Again, not always, but if we're looking through here, see this one did not, but then the second one, you get that strong pullback, 26%. After we see that, first red candle above the Bollinger Band signals pullback. That is a 19% pullback. So, and same with the last breakout. Then that got sideways movement. So now that I saw this red candle outside of the upper Bollinger Band, and I'm already up, let's see, what percent is that? 32% on a 2-week trade. Took a good amount of size off. I think I have about a quarter of the position left. We'll see how this trades. If it's anything like previously, it'll pull back and then set up constructively for another breakout. But this was a great trade for me. This was one of the first breakouts that I got true size on, got 10% of my portfolio on the trade, and have handled it well so far. On Wednesday's live stream, I got a comment that, oh, Mondays was a classic blow off top. This has to be going down. Monday was not blow off top at all. You saw high volume, and you saw a large green candle close near the high of the day above the Bollinger Band. A blow off top is what happens basically when a stock's already been in a very strong uptrend, like multiple days above the Bollinger Bands, and then you get a long upper wick. So what's a good example? Kind of like this one, a long upper wick, usually a red candle, and it comes on high volume. That would be the ideal blow off top. Monday, no, not Monday. What was that? Tuesday, Friday, Thursday, Wednesday. Wednesday's candle was a sign of strength for me. And then we saw that a follow through on Thursday, some good follow through today, but getting ready for a pullback. Is it possible to keep running? Absolutely. Of course, you can keep running. But want to lock in some profit while it's there. If it pulls back, I'm watching that rising 8-day exponential moving average to kind of catch it like it has in the past. So that's NIO. Great trade. Completely bailed out my portfolio on Wednesday when I made that sell H error and had CLDX to deal with. So it was still red on Wednesday, but this really buffered my P&L, which helped me just emotionally through the day. So that's NIO. PEIX. If you've been on these streams, this is one that I talk about all the time, but it's such a beautiful chart, such a clean chart to study for future breakouts. Traded this twice, and this is just the gift that keeps on giving here. So again, had that 40% drop, 23% drop, 8% drop, and then as volume's getting lighter and lighter and lighter, and then you get this breakout candle. I bought on that one at like 428. Then we got some strong follow through as it broke over the round number of $5. Red candle close over the upper Bollinger Band, get your pullback to the 8-day. So I was out at this point. Missed this breakout because vacation, but put a buy order in if we broke over 8. So got filled at 806, and since then it's been a really easy stock to take profit through some multiples, but be really hands off. Handled $9 really well, similar to how it handled $5, where it broke over a couple days, kind of tested. Volume got lighter there. We had the one red day, similar to this smaller red day pullback. 8-day exponential moving average held very well on this. And then you got immediately a bounce back, reclaimed that 8-day, made a higher high, higher low, volume uptick. So at this point, I'm like, this is great. This stock's going to move to break 10 now. And we broke over 9 cleanly on Wednesday, higher high, higher low on Thursday. Still think it's going good. And then today was the first time where I'm like, all right, this is getting overextended. Look at the upper wick, how long that upper wick is. So from today's close, 6.4% in that wick. So I did take a lot of my size off here. I think I have about I'd say maybe 20% of my position left on here. Very much expecting a pullback to the 8-day. No, probably not the 20-day. Probably a pullback to the 8-day. Probably test some of these highs here. That's where the support's going to be at. So don't be surprised if this pulls back under 9. Right? Under 9, yeah. On Monday, Tuesday. As long as it holds these highs well, it's still going to be in a strong uptrend. But this is a sign for you to take some profit. So that was PEIX, great stock, super easy to trade. BGFV. This is one that I had traded in the past as well. Got a really quick breakout here and then sold too early, but also then left for vacation later on. So I missed this much stronger breakout, but notice how it broke out, pulled back, but made a higher low here, showing that, like I did, took profits. A lot of people were taking profits too quick on the trade. Let me get the one large candle out. But on the pullback, it was lighter volume on the breakout than on the breakout. Held the 50-day, broke out cleanly, missed the breakout. And now we get pullback to the 8-day. After pullback to the 8-day, now I'm getting interested in the stock. I was too heavily invested in other things to trade, but with that Thursday move down, I got shaken out of some stocks that were performing poorly, so freed up some capital to get me into a stock that was set up well to break out. So bought in, let's see, I think my average was 855, did it in 3 minor buys on Thursday. And then today we got that clean break over Thursday's high, pressed all the way up to the upper Bollinger Band. What was the high of the day today? 972. Missed the second multiple of my average gain by, I think, 2 cents. I had my order set to sell at 974. So booked 10% of the move for 7. And now it's pulled back. Long upper wick. I still like it. It's still in a strong uptrend. Could we pull back to the 8-day? Absolutely. I think we might do that, or at least test the low of the day from Friday. But still like it. Still in with 90% of my original position, so probably 9-ish% of my overall portfolio. But that's BGFV looking strong. If you're in it, watch that 8-day. And then if you're looking to buy, you're hoping for another small pullback day to that 8-day so you can get in as well. But that was great stock today to move. And then we have Zoom, ZM. What a monster this has been. Broke out 40% on earnings. Quick pullback to the 8-day, a little undercut that. But then just kept going with their strong uptrend, kind of check mark there. I missed all of this part, but as this pulled back to the 8-day exponential moving average, I bought in price of 481, and then it just moved sideways on me, and I just had to be patient, similar to how NIO traded. No reason to sell any. Stayed right above or at that 8-day exponential moving average, volume getting lighter and lighter. Some people not as patient, getting off the stock. And then I think last Friday, this is the green candle. Let's see. Yeah, last Friday, made higher highs, higher lows, big volume. Again, I think the major difference the main takeaway of my trading the past 6 months has been if you can identify volume patterns to help your breakout kind of analysis, you'll be able to find a lot cleaner breakouts. So what you're looking for with that is a stock that's already have been in an uptrend, already broke out on strong volume, and then those pullbacks on light volume. So green days, heavy volume, red days, light volume. And that's what we saw. Similar to how this was just kind of pulling back, you saw volume doing the same. So when those two things mirror, I try to get as low of an entry as I can, but once a stock starts to show some strength. So I bought on this day because it broke over the previous day's high. I thought maybe we would just bounce immediately and go, but once I was in, just move sideways, that's fine with me. But I'm not just blindly buying into a downtrend. I want to wait till the stock's starting to show some strength. So maybe you bought on Friday, didn't have to kind of waste this emotional capital through here as it moves sideways. Got a clean uptrend. But now look at this. We got the close over the upper Bollinger Band on increased volume. That's the bullish sentiment. You're likely to get continuation when that happens, and that's what we got today. And pretty much the same thing. I did take a little bit off, just one share at 565, 564. Just booking some profit, trying to release some capital, get off some leverage basically with that. But looks really strong. Again, just try to study the charts of stocks that break out, so you'll be set for the next time a stock, for the next stock that sets up in the same way. And let's see. And we talked about this really quickly, but want to jump back to it. CHWY has been another really nice winner for me. I set this clean resistance level here. So resistance previously turned into resistance after this pullback. And so once we broke over that, I bought in, 59.22. Then since then, break, close at the top end of the Bollinger Band. Same thing, all good things. Taking some profits on the way up. But notice how when we got that red candle, I didn't take any profits, or I didn't sell anything on that day because volume was a little bit lighter. It was the first red candle we got. I've already booked some profits, so I'm going to be a little bit more patient. Like I got called out on in the chat, Nick, you sell your winners too early. So I'm like, no, I'm not going to sell this too early. This is acting fine. This is just the first red day. Then on Thursday morning, I'm feeling like an idiot because we gapped down. But 8-day exponential moving average holds perfectly. I'm now feeling great that I didn't sell. Moved up, closed green on the day, and then after hours, I think there was an upgrade there. So we gapped up today. So what do we do on gap up days? Do we buy right at the open? Absolutely not. I actually just took, I think, one share off, nothing crazy, but just booked a little bit of profit on that as well. And then you see gapped up, red candle close over the Bollinger Band. We might see another sideways movement, maybe a pullback, not sure. But now through these 3 sells, I have my profit. I have a really nice entry point all the way down here. I'll probably move my stop up to the low of this green candle, so even below the 8-day moving average, and just let it play out because it's been working really well. So that's CHWY, CHWY. Let me read through some of these comments really quick. Yeah, Tesla. Tesla is one that I have been trading as well. Got in at 428 there, so got that nice volatility contraction pattern, 35% pull down. Then we got a 23%, that's less. Then we got a third one of 10%, that's even less. So getting tighter, tighter, tighter. Volume's not as light as I would have liked, but you do see volume getting lighter. And then I just drew this downward trend, got in 428 as it captured the 8-day exponential moving average. And since then, it just kind of has been working out for me. Took some shares off as it went through the first multiple of my average gain. And then today, I did take half my position off when it went red. So green to red today as most of the market was going. And as we're getting closer to earnings, that's on, I wrote it down so I'd be prepared, Wednesday, the 21st. If I don't have 10%, I didn't want to be holding all the way through earnings. And you can kind of see this was showing relative weakness as well lately. Not sure if that's earnings related, no idea. But when this didn't gap up, as a lot of the stocks that were pushed down yesterday, that was my first sign that, okay, this isn't showing as much strength. Maybe we move off this. As it went red today, just took some shares off. Not completely out of the trade. If we start running up into earnings, then I'll probably hold my remaining shares through, but we'll see. Earnings is always a coin flip. No idea how that will go. So I use a linear scale, or I guess all my charts are linear, just what I've been used to. I've never had my charts on like a logarithmic scale. So let's see, MTA. Haven't seen this stock before. So again, this is just technical analysis. I have no idea what this company does, what they're all about, some streaming service. Not a bad chart. Let's see, broke out 84% back in July. Let's zoom out, get the full picture. Yeah, so relatively strong. Then pulled back. Let's see, from the highs to the low here, 31%. Once we get a strong breakout like this, what I'm looking for is like a 30 to 40% pullback's not out of the question. Once it starts pulling back more than like 50%, I usually scratch that from my watch list. But look at this. We get a breakout with high volume, and then red day, red day, red day, lighter, lighter, lighter. And then today's green day came on heavier volume. Great catch. Still closed over the 8-day exponential moving average there. So first test on Monday will be breaking the high from Friday and that 50-day simple moving average. I'm going to add this to my watch list. Thanks for bringing this up. This looks like a good chart to trade, especially when I forgot to mention this earlier on, but when the markets are acting very shaky and like some of the big names aren't in a strong uptrend, I do like to go to some of these cheaper name stocks, PEIX, BGFV. Those all worked really well, while some of the markets, like the major market movers, were trading sideways or even down. So kind of getting away from that pure market risk, you could trade some smaller names, get profit that way. But that's MTA, looking good. I'll add it to my watch list. Thanks for bringing that up. Let's see. BL. Blacklineinc.com. Again, no idea what this does. Strong uptrend through here, 125% through the market rally. Then putting in those higher lows. Dang, this would have been perfect. Look at this. Broke out, pulled back, then got tighter. So you have your resistance right there. So once we broke out through here, got to pull back and look. I just drew that, kind of focusing on the highs when it broke out through here. But look at what held as support then. Usually when you break through resistance, it then becomes support on the other end. And the low of the day is almost to the cent, dollar probably, because this is a more expensive stock. With that previous resistance, showed support, reclaimed that 8-day higher high today. So this is one that I'll add to my watch list. I have a very long watch list that I would just scroll through at the end of the day to watch. Doesn't mean I'm near trading them or anything, but what I'm looking for on Monday is a break over these previous highs to get the party rolling again. This has been, let's see, August to October, so 2 months kind of moving sideways, getting ready to go. So this has some time, has some traders ready to push it higher. So good stock to look at, BL. Have some stocks that I want to bring up today. So first one is PENN, Penn National Gaming, Barstool affiliate. I traded the breakout last time. Really nice. Let's see, broke out 65%, pulled back, held that 20-day simple moving average. Kind of head fake, broke out, and then once we broke over the previous day high here, I bought, sold through the uptrend. Looks like I sold the last one 2 days too soon. Again, that was something still need to work on. But now it sets up again for another breakout. Pulled back to the 20-day simple moving average. That held just like the first time I pulled back last time. Second time through, didn't hold, but it made higher lows. So you can see the lows here were at 62.50. The lows the second time were right around 64. So after the second lows were put in, then I got interested because this has been industry leader and has pulled back. I'm not buying a stock that's already extended, getting a good entry on this. So bought in with a third position size yesterday as it reclaimed the 8-day and then closed right at that 20-day simple moving average. Today it gapped up at the open, so I just sat on my hands, didn't do any buying at first. Then when it pulled back, tested that 8-day exponential moving average, that held, so I put my buy order in. Once it broke over 70, buy the rest of the amount, got filled at 70.04, and then just a really clean move with big volume, increase of volume there. That tells me at least a good amount of people are thinking that I'm right on this move. So that's PENN. Still looks good, not completely broken out of this base. So if we get a sideways move, something like that on Monday, still time to get in. But I'm already in with my full entry size, so we'll be seeing how this reacts on Monday. Also to look at SGMS, another one that I took full size in today. Kind of a power play. Let's see, I think it broke out 90%, yeah, in 2 weeks of trading. Then went sideways. You're seeing that pullback break under some previous lows through here. I like to see those pullbacks break under those previous lows, get those stop losses out, as long as I'm not already in the stock, because then it allows me to get a tighter entry. Similar to PENN, got in quarter, maybe a third size yesterday as it showed strength, and then got in the rest as it broke over the previous day's high today. Very, very light volume, 90%, then moves sideways. The probability is that it moves higher. Is that an absolute? No, for sure not. Could absolutely go against me, and that's why I have my stop losses to get me out of the trade if it does. But probability is in my favor. I have good size on this. Volume patterns looking exactly how I want it to look. Let's see what Monday brings. Not too far extended from the base already. You could still get in. Use the break over Friday's high on that. So high 36.45. I have a couple others, but really quickly want to say if you guys are enjoying the stream, just click the like button. It really helps out the YouTube algorithm. Keep on commenting. I really enjoy doing these streams. The last couple we've really picked up. I feel like we have a great group on StockTwits going. I know a lot of the people that I've interacted with have recommended stocks that I look at, and they've made me a ton of money. So I love when you guys comment, ask questions, bring stocks up to me, because it makes me money, and then we can collaborate, kind of pick each other's brains on what's going on. So if you don't already, follow me on StockTwits and Twitter, and if you could help me out greatly, leave a like on this video. Let's go 2 more. I promised I would cover Beyond Meat, and also because it was on my watch list. So BYND, stock that I had traded a couple times through here. Let's see. The latest time, just drew resistance with some of these highs in the beginning of October. Got in at 171.70, sold some into strength, and then again, I sold. This is one where it looks like I did the right thing. I didn't do the right thing. I should have stayed in this trade longer, because even though I made money on this trade, again, nothing's absolute. I'm trying to put probability in my favor. I should have stayed in this. But now that I'm out, I'm looking to get back in, because this is a very strong uptrend. We see volume pattern working in our favor, and now we get the pullback right to that 8-day exponential moving average on very light volume. Today's low undercut yesterday's low. Let's see, did it undercut this one? Low is 180.96. I don't think so. 182.36. So not in this trade yet. What I'm looking for on Monday, if it breaks over Friday's high, so if it breaks over today's high of 188.30, maybe I'm taking some shares there. Ideally, I would love it to just kind of pull back, break under this low, get the rest of the stops out so we can take off. But if it doesn't, immediately shows strength. This is a stock that, look, that's 44% in a month-ish. That's strong. It's been an industry leader. You can see this chart. Very strong movement. So probability is it goes higher. Just a nice consolidation on very light volume. I like this long, but if we then kind of undercut these and start picking up the volume when we're selling, then we're likely to kind of retest the previous highs here, which coincides with the 20-day simple moving average. So if you're already long and you were holding like a good trader, not like me, that's something I'm watching. If we break under that and keep going down with increased selling volume, then you're probably booking some profit and then looking to reload with a pivot of the 20-day simple moving average. So that's BYND, Beyond Meat. We got CRDF. Let's see. Let me just answer that really quick. So probability that we drop down on Monday completely matters with what goes on over the weekend with the presidential race, COVID, all that stuff. So right now it's in this kind of light pullback, but it's kind of, you have to be reactionary here. If we undercut these lows, then you're looking good on your short or put, whatever. But if we don't and it opens green, not something that I would want to hold a short on. So CRDF, mentioned this before. Through this, I bought on a very, very steep pivot at 1540, but a very light position size. This is one that I traded in the past when it pulled back to the 8-day exponential moving average, and it broke out, what was that, 20-something%? 30%. So got a really good profit on that first break, or not first, but third breakout. So now looking to add to it again. But we've now broken under the 8-day. We have 2 long upper wicks. Today, it was looking like we might break over Thursday's high. Never happened. Printed that inside day on very light volume. So something to watch for next week. If we break over and kind of hold over both of these highs, maybe even the high from Wednesday, this stock's got power. It's got the volume pattern that we're looking for, so still has room to run. And I'll probably be looking to add back in. So still in the stock with a super light amount, but something to watch into next week. LAZY. This was a great trade until the secondary offering for me. Got in with this kind of lower pivot, 1340. Sold into some strength here as we got a breakout. Then got a secondary offering, pulled back, cut the rest of my trade I didn't have too much left. Just wanted to free up capital and kind of knock off a stock that was on my buy list. But has held really well. Pulled back to previous highs right in that zone. And today just turned around. I don't know if there was more news on this. I wasn't paying too much attention, but I mean, look at the strength, look at the volume pattern, breaking over previous highs. Now, I don't know if this is all-time highs. Maybe it is. Yeah. Now at all-time highs. What a monster move. And it comes from a really nice volatility contraction pattern. You get one pullback there, 36%, kind of the second pullback through here, 19%, and then one more tiny one, 6%. So those 3 pullbacks, and then breakout with volume. That's like price is important. Volume is very important. Really helps you identify how strong a breakout is. Usually when the stock's going over a pivot point or what we drew as a resistance point, but it does so on light volume, it's very likely that it's going to pull back to at least that base to test that area, maybe knock out some stops before moving higher. If it breaks out with volume, much less likely to pull back to that base. So that's LAZY. If you held through this, you were probably holding at a good price through here, or maybe even before, and that didn't bother you, but looking really strong today. Let's see. I have a couple more on here, but I don't want to make this stream too long. Let's see, which one should we talk about? Let's go with TITN. So we got a breakout here from the base, 14%. Now put in a really flat top through here, pulled back, undercut some lows with the gap lower on Thursday, so getting a lot of stops out through there. Pushed higher to reclaim that 8-day. Then we got higher high, higher low, still over the 8-day. Small red day today on super light volume. Break over Friday's high on Monday. And zooming out, you can see this has been in a strong uptrend recently. Overall, still has a ways to go to get to all-time highs. Let's see, what is that? 18% on that move. That's TITN. Again, looking for some more strength. Break over Friday's high, today's high of 1514, and that can take off. Finally, Tupperware, TUP. If you haven't been aware, Tupperware has been on a monster run lately. I'm just picking from kind of the base to the highs. 2,100% since April. Probably having to do with people staying home cooking. I tried to trade in this kind of flat top breakout, but got stopped out with this lower wick. And then thankfully I did, because we got this full kind of sell off, 25%. Since then, started getting interested. SEDG is the other one, so I will cover that. Thanks for bringing that up. We put in a low, really nice low, bounced up, kind of couldn't handle prices over the 20-day, pulled back, but made a higher low. So there's one low. There's your second low. Higher low. I know those are drawn not perfectly. I am a math guy, not an artist. But now this is giving you a really, really nice entry point. Probably one of my main watches for Monday. Exactly what we're looking for. Higher lows. Already a winner. Up a ton. Let's kind of zoom in a little bit to check the volume pattern lately. Broke out on high volume. Look at how light the volume was on the first part of this pullback. We did get some dumping through here, but right around previous kind of like camp here held support. Volume breakout higher than the selling, and then just through here this minor sell-off, very, very light. Couple bounce back days higher than the previous ones, and then today's sideways movement, super light volume, down 2%. Perfect setup to watch. I'll be on this on Monday. And let's wrap it up with SEDG, SEDG, Solar Edge Technology. Another great one that put in a huge move. Anything with solar has put in a large move lately. This one up 66% in just a couple weeks. And then, boom, sideways action. Not showing a ton of weakness. Has touched off the 8-day exponential moving average. So I had it on my list to buy this morning, possibly, because I saw this kind of pennant going, but it gapped open. So I was like, let's see how things work, and just kind of sold off through the day, but still light volume, still at the upper edge of that upper pennant. So looks really good going into next week. Volume did get a little bit lighter through here. Looks strong. Definitely on my watch list. I don't know if I'll have enough freed up capital to trade it, because I do want to. BYND and Tupperware are going to be kind of my two main focuses, and CRDF. But this is a really strong pattern. If this is something that you've already focused on or you're already in, easy next buy point, especially if we break over high from today. That would be a huge show of strength. And let's go one more. Tractor Supply, TSCO. Nice cup. Nice sideways movement of the handle. What is this monster run? 127%. Probably one of the cleanest uptrends I've seen. Pulled back. Only 12% on that. Really nice. Probably won't move as quickly as some of the breakout stocks that I talk about here, but from a chart perspective, this is really nice. Kind of saw this head fake breakout and then undercut of the lows, probably to capture some people, get them stopped out through here. Today we saw higher highs, higher lows, lighter volume though, so not jumping in to buy that and hold up here. We got earnings. Oh, we have earnings on the 22nd. I'm not buying a new position into earnings because I have no idea. I'm just a technical trader, have no idea how these companies are doing on their books. If you have some profit, maybe you're booking some going into earnings, or you're just letting the rest roll through. But that's TSCO. Looks really solid. All right, so anything else in the comment section that I missed, I'll go through after I'm done posting this video on StockTwits and Twitter. So if I didn't answer it here, I'll answer it on StockTwits. So again, make sure you follow me there. Please, 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 if you enjoyed your time here, leave a like. If you got any information that can help your trading, any likes help me out tremendously. And with that said, have a great weekend. Get away from the screens a little bit. Come back Sunday. Start writing down your plan so you're not trading with emotion. All right. Have a great weekend, and I'll see you guys next Wednesday for the midweek Market Movers stream. Take care.